Zillow and Redfin are both showing the same patterns. We have more inventory in many markets. We have longer days on market, and sellers are cutting prices up to $100,000 in some situations or more just to bring a buyer to the table. And so tonight, I'm going to map where we're seeing the most distress in the housing market and which metros may be actually recovering from a recent downturn. And I'll also put your city or your zip code or your county on the screen live, and we're going to pressure test this market together. And we're going to really find out where home prices are dropping right now and collapsing in big ways. If you are new to the Housing Nerd, welcome. My name is Jason Ferrier. I am a realtor. I'm an investor. I've been doing it now, almost 8 years. And you can think of me as your no BS guide to this crazy housing market. I'm not your typical realtor. I'm not going to tell you that home prices always go up. And I'm certainly not going to tell you that the market has never been so toxic and you should just stay away whatever you do. So I'm not a cheerleader and I'm not a crash bro. And if you came to learn about the housing market, you came to the right place. Or if you want to learn about the housing market, you came to the right spot. All right. Well, good evening. Hopefully you can hear me okay. And if you can't, let me know. I got some new equipment here. What's up, John Doe? How are you doing? Good to see you this evening. Yeah, if you have a metro or an area of the U.S. you want me to take a look at, drop it in the comments and we will get to it. So let's take a look at this house right here. You can see what's going on with this one in Dallas, Texas. They had a $200,000 or rather $195,000 price cut. And if I take a look, for instance, at an area like Dallas, I can see that price cuts are surging right now. 24.4% of all homes have had a price cut that are listed on the market in Dallas. And then if I take a look at prices, like where actual home prices are, and I can go down actually to the zip code level, but if I take a look at the metro market of Dallas, I can see year over year, home prices are down 4% year over year. And that's quite a big drop year over year, no doubt about it. But the hits keep on coming. If I take a look at something like this house in Atlanta, Georgia, we're seeing a price cut of $50,000. And these are all over the place. And granted, these are expensive homes, but it goes to show you that sellers are having to discount their price substantially to get buyers to even sniff some of these homes. And then if I take a look at an area like Atlanta, and I can see that 21% of all homes have had a price cut that are listed. And then if I look at the actual price, like how are prices doing in an area like Atlanta, down 2.9, nearly 3% year over year. So home prices are definitely dropping in an area like Atlanta. And check this out. This one's pretty crazy. Look at the price cuts going on in Columbus, Ohio, where I am. I'm near Columbus anyway. 27%. Nearly 30% of all listings in Columbus have had a price cut. Yeah, that's right. Now, the difference is if you look, because prices aren't dropping everywhere. I mean, home prices are not dropping everywhere. If I look at a single family home price year over year, according to Zillow data, it's actually up 1.6% in Columbus. So not down, up, but not up very much. So we're seeing price growth overall slow. And we're seeing inventory in a lot of markets build, although nationally inventory is actually falling month over month, and new listings are definitely falling. So we're going to get to what all that means. Again, if you have a market you want me to look at, drop it in the comments, and I'm happy to take a look at it. So if I look at an overview of the United States and just kind of figure out, hey, where are prices falling? Where are they rising? And this is according to Zillow data. Now, the interesting part about Zillow is that Zillow uses the 35 percentile to the 65th percentile range. It's not a median price. That's not what Zillow uses. So Zillow takes out all the high-end homes and they take out all the low-end homes. And that's how they kind of get this Zillow value index, which I like. I like the fact that they're not taking into account, super, super cheap homes or really, really expensive homes. A lot of y'all have asked about that. So that's kind of what's happening there with Zillow data. But if I take a look at these states, and this is just like, an overview of states when I look at prices, you can see that like the areas that are blue, or the states that are blue, are where home prices are rising. The areas that are yellow are where home prices are falling. So if I look at some of the areas that have the worst, or the largest price drops, Florida 5.3% down, Texas down 2.5% year over year, and this takes out seasonality. This is not looking month over month. This is looking year over year. So we're taking out seasonality. If I look at Arizona, for instance, down 3.1%. Again, Texas down 2.5%. Florida down 5.3%. Get an area like, what else is down? Nevada 1.1% down. Area like Tennessee is actually flat year over year, but North Carolina down 0.6%. South Carolina down 0.4%. Georgia, the state of Georgia, down 2%. But then if I look up north, I can see an area like Ohio up 3.7% in home prices, in the typical home value. Illinois up 4%. Iowa up 4%. Wisconsin up 4.4%. New York up 4%. Pennsylvania up 3%. So this kind of gives you a glimpse that, hey, the Midwest, the North, the Northeast, still seeing home prices go up. Areas down south in the Sun Belt, West, Southwest, that's where the pain is in the housing market. Now, if I switch my look here and I want to take a look at maybe inventory and see how that's trending. But you know what? Let's do price reductions now, and we can see what is happening with price reductions. So in Ohio, we're at 21.5% of all homes have had a price cut that are listed. Florida, 19%. Look at that. That'll shock you, right? You've got basically, you've got Ohio has more price cuts than Florida, percentage wise. Pretty crazy, right? Pretty crazy. What else? Let's see. Let me see if maybe I can change this view to something a little easier for y'all to see. Is that better? Maybe better. There we go. Maybe that's better. All right. So yeah, if you look at Ohio, we have more price cuts in Ohio than we do in Florida right now. Look at Alabama, 16.4%. Texas, 20% of all listings have had a price cut. 20%. Ohio has more price cuts right now than Texas or Florida. Who'd have thunk it, right? California, only 15% of all listings have had a price cut in California. Not that many. So that's what we're doing tonight. We're reviewing your zip codes, your markets. I do this every week, but because of the holiday, because of Christmas, I'm not going to get to it tomorrow or Thursday. So I wanted to jump on it tonight and deliver this latest housing data for you. Continuing on here, 17% of all listings in Pennsylvania have had a price cut. Right? Who's the biggest here? Who has the most price cuts? Arizona, 24.4. They could have the most. Indiana, 24.5. I think they're the leader right now, as far as what I can see. Oregon, 23.5 or 23.2. Yeah. Indiana has the most price cuts, it looks like, right? 24.4 for, Indiana has the largest share of price cuts. Pretty crazy. But let's look at inventory now, because inventory drives the prices, folks. Like, if you really want to know what's happening to the housing market, watch inventory, because that's going to tell you where prices could be headed very soon, right? If you have a lot of inventory growing, if you have inventory growing at a rapid pace, if you have a lot of forced selling people have to sell their home. If you see that in your area, it's a good indication prices could come down. Conversely, if you're not seeing an explosion of inventory going past seasonal levels, going past, you know, historical levels, if you're not seeing that, prices could probably stay sticky or go up. So if I look at active inventory versus 2019, actually, let's do this. Let's look at active inventory year over year. So this shows us the states and how much inventory of homes for sale they have versus this time last year. It's year over year. It takes out seasonality. So in Texas, there are 14% more homes for sale than this time last year. If I look at an area like Ohio, 12.3% of rise in inventory year over year. Florida, look at Florida. What do you think of that? Florida has 7%, only 7% more homes for sale than they did this time last year. That's it. That's it. So overall, I mean, about every state has more homes for sale than they did this time last year. I mean, there really isn't a state that's down, thankfully, although some are really low. Like look at New York, 3.9% of all. I keep saying that, but it's a rise of inventory of 4%. If I go to Illinois, they have 2.6% more homes for sale. That's it. Just 2.6% more homes. So that's that's not what you want to see if you want lower prices. I'm just going to move my this, this is driving me nuts. Probably bouncing around a little bit right now, but it'll calm down. All right. Hey, and if you're coming on the live, do me a favor and hit the like button. It'll get more people involved. If you even share this, if you're all on and you share this with somebody, that'll get more people on too. It's kind of a weird time I did this, so I don't know how much traffic we'll get, but I want to deliver this data before the holiday. So then if I look at North Carolina, they have 30% more homes for sale than last year, right? But here's where it gets really interesting. Check this out. This is active inventory versus 2019. In other words, go all the way back to 2019. How many homes did you have then for sale? Now, how many do you have? And what's that difference? So if I zoom out, you can see the brown states are down, the green states are up. So Texas has 34% more homes for sale than they did before the pandemic. Interesting, right? I think it is. And if I look at an area like Arizona, they've got 40% more homes versus pre-pandemic. So Arizona is exploding with homes, exploding with inventory. And then look at Florida. They've got 23% more homes versus 2019. But check this out. This is where it gets really interesting. Virginia is down, not up, but down. They have fewer homes than 2019. West Virginia, 42% fewer homes than 2019. Ohio, 25% fewer homes than 2019. Pennsylvania, 34% fewer homes. You think that's a bad market? Look at this. This is going to blow your mind. Look at Connecticut. Down 70%. That's not a typo. That's not a typo. Down 70% in the number of homes for sale versus 2019. I mean, that's extraordinary. That's like, it's just not good. If you're trying to buy a house there, that's just not good. Vermont down 47%, New York down 40%, Pennsylvania down 34%, New Jersey down 55%, New Hampshire down 39%, Maine down 37%. So the Midwest and the Northeast are just, it's not good in the number of homes for sale. But what's interesting is, look at this, like, look at California. They still have 6% fewer homes for sale than they did in 2019. So, you know, you may hear narratives out there, but I'm showing you the data. The narratives could tell you that, hey, give it a couple more months and the demographics are going to take over the Northeast and all the inventory is going to flood the market. And you know, soon you'll see this, a nationwide price crash and, inventory all over the place. Well, I mean, the data is the data, folks. And right now, the Northeast, Midwest are hurting for good inventory. I mean, even in areas where inventory's growing, there's probably a lack of good inventory. Um, you know, there's not a lot of affordable housing, even if there are $3 or $4 million homes listed. So that's kind of what I'm seeing as far as inventory. Now, if I go to, um, let's go to this existing home sales. Let's do median days on market. So this is how long homes are sitting on the market. And actually, let's do year over year. Mm. Yeah, let's do this. So this shows us how long homes are sitting in these different states. So like the worst one is North Dakota. I mean, homes are actually sitting, they're actually selling 22 days faster than they did last year. But in most of these areas like Ohio, we're up 1 day year over year. So homes are just sitting 1 day longer year over year right now. And let me actually go to median days on market. Maybe that'll help us. So 46 days on market in Ohio. And last year was 45 days. And then if you go to a market like, uh, let's see, Florida, 81 days. So homes are taking 81 days to sell. Last year, they took 78. So homes are sitting longer. There's no doubt about it. They are. Look at Texas, 71 days. Last year, 65 days. Illinois, 44 days. Last year, 44 days. Again, the Northeast, the Midwest, the housing market just continues to move forward. Not as fast as it was during the pandemic, but it's still moving forward and homes are still selling. And a lot of times they're not sitting much longer than they did last year. So it's a weird housing market right now. All right. Let me look at a couple comments if there are any, and then I'll jump into some of these requests. I already had some from earlier, a couple other videos I did. What's up? How you doing, John? Good to see you. Hey, Pirate, Justin from Houston, Texas. We got to jump into Houston and find out what's happening, right? Hey there. What's up, Ma Deuce? Good to see you. In January, student loan wage garnishment begins. ACA insurance premiums are going up for many people. How is that being factored into predictions for the 2026 housing market? That's a great question. So, I'm going to actually do a video next week that I'll launch that reviews all of my predictions for the 2026 housing market. Going to combine I'm going to combine all of the predictions from all the analysts. So whether it be Zillow or Redfin or, Melody Wright or whoever, I'm going to put them on a sheet and we're going to review the predictions for next year. But when you think about the housing market, what I look at and how I view it is that there are a million factors. And this is a great question. There are a million factors out there that could change how the housing market functions, right? Job loss, student loans, I don't know, name something, right? A war, um, a silver tsunami. I mean, there are a million like factors out there. Um, those, in my opinion, are more macroeconomic. When I look at the housing market, I go off of the data that we have and look at those trends instead of trying to craft a narrative about if this happens, we will do this. So I'm predicting this. I look at the housing market right now and I don't see a massive price crash coming next year. Why? Because inventory of homes for sale isn't it's not exploding. And not only that, but new listings. This is probably one of the most important things is that new listings are not explosive either. So, and you got to remember if demand crashes further than what it already is, that doesn't mean we'll have a price crash. Price crashes happen because of forced selling in the market and an explosion of active inventory. That's what causes lower prices when you increase supply rapidly. And if demand doesn't increase rapidly, you're probably not going to see a price crash. Conversely, if supply is, for some reason constrained, like we saw during the pandemic, and demand rapidly increases, you see prices move up pretty fast, right? So I don't see the data telling me that prices are going to crash, um, at least according to the inventory. Now, that is national and most of the US, but there will be pockets where you see massive price decline. You will see that. So, for instance, and I'm glad you asked this question, like, look at look at home prices compared to the 2022 peak. Look at this. This tells us how much home prices or how far they've either gone up or gone down since 2022. Since 2022. And so if you look at an area like Texas, home prices are down 5% since 2022. But if I look at an area like Ohio, home prices are up 14%. So remember that. Now, let's look at inventory in those two states. All right, now let's look at Texas. This is the total number of homes for sale in Texas. 131,000. And this will help me answer the question and help illustrate it. So there's 131,000 listings in Texas right now. That's a decade high. Like, they've never had that many listings in the last decade. Now, if we had data going all the way back to 2008 during the great financial crisis, you'd probably see this many homes for sale, or probably approaching this many. But the point is, inventory has exploded. Look at this. They had 46,000 homes on the market in November, right? But as inventory started growing, what happened to prices? Well, prices fell. Now, if I look at Ohio, we've got 22,000 listings right now. Go all the way back a decade in Ohio. I mean, pre-pandemic, we had 29,000. In 2018, we had 33,000. In October of, in 2017, we had 34,000. In 2016, we had 40,000. So we're still way undersupplied in Ohio. And because of that, prices have remained sticky, right? And they've actually gone up since 2022. They've gone up 14%. So that basically illustrates the fact that as you see inventory flood into a market, and especially if it goes past historical levels or the trend like we see in Texas, right? You see this trend skyrocket like this, that would tell me that prices will probably fall. And they did in Texas. They fell a lot. And if I actually look at this, may tell us even more. If I look at the data center in Redfin. So now I'm switching to Redfin data, but it's a chart. So I think it kind of tells us the story a little bit. Like, look at active listings. So this is how many homes are on the market nationally. If I look at Redfin data, you can see we're dropping now. We only have 4% more homes on the market right now. Only 4% more than we did than we did last year. So this, and then if I look at, and here's the other thing, if I look at new listings, right? Look at new listings down 3%. So there are fewer people putting their house on the market right now than they were putting their house on the market last year. It's not, these people aren't taking their house off the market. These were people not even listing their home ever. They're just not putting the house on the market. So what all that translates into is not a lot of forced selling. So as the student loans, as the insurance, as the property taxes, as the job loss, as wage garnishments, as natural disasters, wars, the economy, whatever you want to call it, AI bubble, stock market, as all those things transpire in the market, you're going to see the housing market change. If you see new listings rapidly increase or active inventory rapidly increase past, historical levels, and you can see that it's trending that way, chances are prices are come down. And right now I'm not seeing that. I'm not seeing that overall. Could it change? Yes. So that was a long way to answer your question, but I wanted to be thorough, and I'm just not, I don't, I guess in the way, I don't really factor that in because I don't know what all this is going to do. I don't know what it's going to do to the housing market. All I can do is follow the data and the trend of the data. Instead of what I don't want to do is give you a narrative that I'm making up because it's what I want to see happen. I don't care if prices fall. I don't care if inventory falls. I just don't care. I don't care if inventory, what it does because I can't control it. So I'm just showing you the data. And the data says right now, no crash nationally. Some markets are crashing or collapsing. We're seeing that right now. I'm showing you that data today. But overall in the US, no. Nope. It could be up 1%, 2% next year. Could be down 1 or 2% next year. Nationally, home prices could be. Now, one of these things could make it worse, but you'll see it in the new listings and you'll see it in the inventory. And it frustrates a lot of people when I say that, but that's what has to happen. You can't have a price crash without supply and demand changing. You just can't. So anyway, yeah, sorry, that was a long answer, but I wanted to be thorough again. What would be a good time to buy a house in Dallas area next year? Oh man, you're going to need to pull very specific data in your subdivision or your street. So you're going to need to go you can use macro level data. Like if you give me your zip code, we can look at it where you want to buy, but take that with a grain of salt. Go into your specific market and analyze what's happening with these trends that I'm showing you tonight. What's happening at your street level or your subdivision level or your school district level even, and look at the price point you want to buy in and the type of home you want to buy. And ask a realtor to pull that data for you and have them send it to you every week or every month, however you want to do it. And then watch the trend and look and understand, are prices going, is inventory rising rapidly compared to last year? And how has it trended over the last, 2-3 years? So I'm not going to tell you it's always a good time to buy real estate. However, I will tell you the winter time is generally speaking the best time between now and, New Year's, because people aren't buying real estate and homes, during the winter, during Christmas and whatnot. So the winter time's a good time. But Dallas has a lot of inventory overall. So it could be a great time all of next year to go hunting, make a lot of low offers, and work with an agent that's willing to, you don't have to work with an agent, but if you do, work with an agent that's willing to write a lot of offers, write offers that make sense to you, not the seller. What the seller's asking is almost irrelevant. And then make offers and keep going until you find a seller that's willing to negotiate. And then if you find a house you really like, make a low offer. And then if they say no, and it's still on the market a month later, circle back and, follow up. Maybe they're ready to negotiate then. But great question. All right. Let's go to let's just look at Dallas. So here's Dallas overall. If I look at, so they've got 24% of all listings have had a price cut in Dallas. It's a lot, right? And I look at year over year pricing. We know they're down 4%. We know that. Let's look at the typical home value in Dallas. $362,000. $362,000 in Dallas. Again, if you tell me the zip code you're looking to buy in, I can put it in here and take a look at it. So not even close to the all-time high, right? Like you hit the all-time high like back here, 379. Is that the all-time high? No. Back here in 2022 was the all-time high. 387, 384. That looks like to be the all-time high. And this is a typical home value in Dallas. This is basically the 35th to 65th percentile. So it's that middle range of homes. It's not the median, It takes out all the expensive homes and all the lower priced homes to give you that typical value. What's this do? That's not going to work. I thought it made it bigger. All right. And then if I look at inventory in Dallas, look at this. I mean, 28,000 homes for sale right now. I mean, you have more homes than you've had in the last decade, right? In the last decade. So it's no surprise Dallas home prices are going down. No surprise at all. What about median days on market? Yeah, look at this. Homes are selling in 64 days. Last year it was 58. So homes are sitting longer, another 6 days. And that's just year over year. How about new listings? What are those doing? This is probably the biggest problem I'm seeing in the market right now. New listings are not growing like they need to. I mean, like, look at Dallas. It's basically flat year over year in new listings. That tells me there's not a lot of forced selling. You need forced selling, a lot of it, to cause massive price decline. I mean, we're just not getting it. Just not getting it overall. Again, there are some areas where we're seeing forced selling, but not across the country. Yeah, like if I look at, let's see, I'm just looking at these new listings. You're actually kind of trending where you always are. Back in 2021, you had 8,500 new listings in a month. In November of 2022, you had 7,500 new listings. November of 2024, you had 8,000 new listings, and now you've got basically 8,000. And that was in November. So it looks like new listings spiked here in June to 13,000, nearly 14,000 new listings in 1 month. That's a lot. That's a lot. I mean, that looks like it's a 10-year high. I mean, it's not 10 years. It only goes back to 2000 and it goes back to 2016, so nearly a 10-year high. But now that's kind of dwindling, right? New listings are dwindling. So if we see more forced selling in an area like Dallas, you'll know because you'll see new listings go up like this, right? Like it did in 2022. And by the way, look what happened in 2022 when new listings spiked like that in Dallas. Look at this. Right in 2022, you had peaked at 388 grand in Dallas, but now look, when you added all those new listings, look what happened to prices. They came down fast. They came down quickly all the way in a year. They had dropped to 376. So they dropped, what's that? $12,000 in 1 year over year. And that is a big reversal from what you saw during COVID, where prices were skyrocketing, right? You could see this run up. I don't know how well you can see that, but there's this run up we had of home prices in most areas of the US, especially like in Dallas. Then you added all that inventory in 2022 with a lot of people putting their homes on the market because interest rates went up. So people were thinking, I better sell now. So a lot of people in many cities dumped their houses. And then prices went down from that explosion of inventory. And you've continued to add it. And that's why prices are down. So just kind of detailed stuff there the nerd looks at on a daily basis. Remember, folks, I cover 3,000 counties and like 960 metros. That's how many I'm looking at. I mean, it's not 85. Oh, we talked about that. No other request, huh? Wow. Okay. You guys are taking it easy on me. I'll do the Northern VA. Somebody wanted to know about Northern Virginia. So I'm going to do Northern VA. Northern VA. Let's look at it. Again, if you have a metro you want me to look at, or a county, or a zip code, drop it in the comments. Let me look at Well, let me just do this. All right. If you had requested Northern VA, this is for you. So look at the zip code level. So this is what a zip code level looks like for Virginia. And you can see red is down, blue is up. So they wanted Northern Virginia. So if I look at Northern Virginia and just kind of get an overview, some of the ones that are down 22743, that zip code down 5.6% in home prices year over year. 22134 down 7%. 22640 down 4.6% in home prices. An area like 22134 down 7% in home prices. And then this whole swath here, which it doesn't exactly tell me. I look at Metro, let me see. Okay, so that's the Washington, D.C. market. Yeah, that's Washington, D.C. So inside of Washington, D.C., homes are like flat, right? 0.1% up, 0.1% up, down 0.2%. You know, you're splitting hairs. You get that close. It's basically flat, right? For all intents and purposes. But outside of DC, look at this 20117 is 20117 up 4.7%. $36. And then if I go to 20115 up 5.4%, 20198 Northern Virginia, just outside of DC, up 4% in home prices. I'm seeing this on a lot of metros where inside the city, prices are not doing as well. Outside the city, prices are doing much better. So let's see if anybody's up big here. 22832 in Northern Virginia, up 6%. 22728 Northern Virginia, up 5%. So there's only a few zip codes here in Northern Virginia that are down a lot. You got 22743 down 5.6, right? And then this one over here, 22134 down 7%, 221, oh, same zip code, I guess. That's weird. Yeah, down 7%. I guess it is the same zip code. All right, now let's do the inventory and see how that's doing. I always look at 2019 as kind of that bellwether of what's happening. So Brown is down, right? We know that. So if I look at inventory in Northern Virginia, like inside of DC, an area like 22039, down 60% versus 2019 levels of inventory, down 60%. 20198, down 70%. 20180, down 56%. I mean, this whole area through here pretty much down versus 2019, but there are areas that have more inventory. Like look at this, 22306 inside DC, up 51%. 20147 up 37% in inventory. So they've got a lot more inventory. Look at this one. This one, 22737, is up nearly 80% versus 2019 levels of inventory. Wow. That's a lot. That's a lot. But generally speaking, most of Northern Virginia has fewer homes for sale than 2019. Generally speaking. Let's look at price reduction share. How's that doing? So a lot of these areas, 14%. I'm just going to kind of flip through and see. Oh, 20119 up 40. Not up. They have 40% of all homes have had a price cut. 40%. 22315 in DC, 25.5% of all homes have had a price cut. This one's big. 20180 up is actually 30% of all homes have had a price cut. A lot of price cuts up there. And that's why hyper local, folks, is really important because this is changes based on where you are as far as zip code goes. All right, so that is Washington, D.C., or Northern Virginia, I guess. Then I had another person ask me for Huntsville, North Carolina. So we're going to look at Huntsville, see if I can find it. Huntsville. No, let me see. Huntsville. All right, 27055. Huntsville, North Carolina. Well, let's start with price reductions. 21.9% of all of their listings have had a price cut. Let's look at inventory. How are they doing with inventory? Wow, look at this. Holy Toledo. They're up 117% versus pre-pandemic. So they have a lot more inventory than 2019. What about year over year? Inventory's up 48%. Goodness gracious. Let's look at prices. How are they doing? Down 2%. No surprise because inventory's up a lot. Let's look at typical home value in Huntsville, North Carolina. $233,000. Looks like you peaked at $240,000. So definitely come down. You've come down since the peak. So home prices are falling there. They're not crashing necessarily, but they're not going up either. It wouldn't be surprising if they remained, a slow bleed over the next, year if inventory continues to rise. So let's look at new listings. How are those doing? You probably don't have a lot of new listings there, do you? Yeah, there's not a lot of new listings at all. Only 14 new listings in October. At the end of October, only 14 new listings. It's not a ton. So anyway, that's what's happening. I would say probably if you continue to see more homes on the market, you'll probably see further price decline. And it looks like you do have a lot more homes, percentage wise, even though the count isn't huge. Like, let me go to the count. I don't know that there's a ton of houses there. Yeah, only 37 on the market. But if you go all the way back in time, you got to go all the way back to what, like mid 2018 to see this kind of inventory. I mean, during COVID, you had 5 homes on the market, 15 homes on the market, 9 homes on the market. It's not very many. Not very many. Let's look at the next one. Oh, I got a couple of requests here. North Bend, Washington, 98166. All right. 98166. What is that? Near? Hmm. It's kind of in Seattle, right? It's actually, yeah, I used to live in near Seattle. I don't remember that area at all. All right. 98166. So active inventory of homes for sale versus 2019. So how many homes do you have on the market compared to 2019? You're down 30% in active inventory. If I look at how many you have, got 29 on the market now. You had 45, 42 on the market in 2019. So you are growing inventory. You can see that, right? The trend line kind of going up, although now it's starting to fall. So watch active inventory because it looks like you have built some inventory. Let's look at price reductions. How are those doing? Only 12% of all listings have had a price cut. Just 12%. That's low. Wow. It basically tells me there's not a lot of people desperate to list their or desperate to cut their prices. Let's look at prices now. So price is down 2.5% there year over year. So this is an area where, I mean, you don't have that many listings. So it's easy to have a large percentage increase in active inventory. But this is an area where, the idea that, hey, more inventory is going to equal lower prices. It doesn't look like you have a lot more inventory than 2019, but prices are down. Although inventory is rising and there's not a lot of price cuts. So you are down 2% year over year. Let's look at uh, maybe it's sellers just deciding to list their homes for a normal price versus a delusional price. Like you peaked in your zip code, you peaked right around the end of last year, 858 grand. Huh. Yeah, Seattle's crazy expensive. And then it kind of dipped this year and now I don't know that it's going up, it's kind of just stabilized sideways, you know? So it's not you're not coming back to an all-time high, but it doesn't look like it's crashing either because if you look at this, yeah, you peaked late last year about this time, 855,000, 858 in January of this year, and now you've kind of come down a little bit to 834. So the typical value has come down about $20,000. About $20,000. I'm just making a timestamp. 46. I hope that helps. I mean, that's kind of what I'm seeing there. Um, More inventory, but not an explosion. Prices kind of look like they're just going sideways. Oh, here's another one. 98045. Hmm, okay. That's another Washington zip code, huh? Yeah. Is that both North Bend? That's not right, right? Let me look at what you wanted. 98045. Okay. You kind of just called it the same area. Whatever. We'll look at that zip code regardless. All right. 98045. So you are flat right now in prices. Prices are just flat. 0% growth year over year. Let's look at the typical home value. Typical home value for 98045, $1 million, right over $1 million. Is it an all-time high? No, you peaked right around here. March of 2025, March of this year, you peaked at $1,015,000. And this is the typical price. It's in that 35th to 65th percentile range. It's not, um, it's not median. It's not average either. But it looks like prices, they're not going, well, you're at $1,001,000 right now. So you're down about 15 grand from the peak in home values. And this is kind of what, east of Seattle? Is that right? What about inventory? How's that doing? You're down 15% versus pre-pandemic. How many homes do you have on the market? You've got 39 homes on the market right now. Pre-pandemic, you had 46 homes. So you have added homes for sale. That's good. You need to, right? If you want lower prices. But it doesn't look like the market's crashing there. It looks like it's kind of coming back to reality, probably. Only 13% of all homes have had a price cut. That's it. Kind of like that other spot in Seattle. My guess is, and this is a pure guess, there's a lot of people that list their home there that don't need to sell. kind of wish pricing, I call it. They just want to sell, but they don't need to sell. There's a big difference, obviously. If they need to sell, they keep cutting the price and they won't delist it. They will just leave it on and lower the price until it sells or until they go to a short sale situation. And then you'll know because it says it on the listing, right? It's a short sale. But it doesn't look like there's a lot of distress there. All right. Thanks, Anastasia, for doing that one. Okay. There you go. Yeah, you corrected it. No problem. Well, we did 2 zip codes there. Knoxville, Arkansas, 72845. Okay. Let's see what's going on in Arkansas. Arkansas, 50. All right. Let's do this one. Arkansas, what's happening? Wow. Look at the single family home price there in that zip code. Down 7% year over year. Down 7%. That's a big drop. That's a big drop. No doubt. Let's look at the value. What's the typical value in that market in Arkansas? $185,000. You peaked at $199. About that. No, 201,000. That's where you peaked back in 2024. And since then, it's kind of sideways, but now it's falling. There's no doubt. 185,577. That's the typical value of houses. Let's do active inventory. You're down 50% year over year. My guess is there's not a lot of homes. Yeah, there's only 2 homes on the market there. So I'm not even going to look at any more inventory. I mean, you just don't have any homes, but when you only have a handful of houses, a change in inventory is going to be really hard to gauge as far as what happens. Because if you sell one house, I mean, if you sold one of those 2 homes, it would obviously change the median home, not the median, it would change the typical home value quite substantially. So areas where there's not a lot of listings, like under 10, under 20, very hard to analyze, obviously. But what we can do is look at this. Let me go back to the zip code level real quick and show you this. All right. This is the county level look. So county wise, in Johnson County, Arkansas, that's where that zip code is. It's down 3% in home prices. Let me just glance at inventory real quick. Because that's obviously, we're looking at a whole county now versus just that zip code. Yeah, inventory is basically flat. How many do you have on the market there? Got 120 homes on the market. But go back in time. Look at this. This is crazy. Back in November of 2019, you had what, 190 homes on the market. Back in 2018, you had 244 homes on the market. Back in 2016, you had 276 homes on the market. So your inventory, and you can just see the trend. I mean, you don't have to be a scientist to look at that. I mean, it's gone down, right? And now it's barely budging up. And prices are flat. So it could be this is what we see nationally, right? Inventory slowly tick up, prices flat nationally, maybe for the next couple of years, unless the government interferes or intervenes, or there's some type of big economic catastrophe that makes that changes the housing market trajectory. But let's look at another one here. I guess some other ones. Yeah, no problem, Anastasia. No worries. GMASH 24, Pinehurst, North Carolina. Okay. Famous golf course, right? 28374. 28374. All right. Prices up 2% there year over year. Look during COVID. Look at this. This is nuts. Prices were up 30% year over year in 2022. Like this period of time here, basically like April all the way April 2021 all the way through what, November 2022, prices just were going up in an insane rate. I mean, you go all the way back to 2011 and prices were nowhere close to that as far as the growth. So you really got wrecked in a couple years there. Typical home value, you're at 557 right now. 557, 570, and that's an all-time high. So you have an all-time high price in Pinehurst, North Carolina. Sorry, just writing a timestamp down so I can do it later. Goodness gracious, great balls of fire. This is nuts. Yeah, so you have an all-time high price now in that zip code. In other words, prices have never been higher. Let's look at active inventory count. 212. So you are growing inventory, there's no doubt. You have 212. Before the pandemic, you had 261. But you got down to like 50 homes on the market. So even though inventory has grown, it's not back to that pre-pandemic level yet. That may be why you're continuing to see higher and higher prices. Let's look at price reductions. Whew. You're at a decade high level of price reductions. 23% of all listings have had a price cut. That's a lot. I mean, nationwide, it's like 21%. So that is it's a fair amount. I mean, you can see it's elevated right now. A lot of sellers have probably cut their price because they're like, oh, I'm still trying to get 2022 prices. Nah, right? That growth is not happening. So they're having to reduce their price. The weird thing is when they do sell, the price is actually higher than it was last year. That's the crazy part. So it could just be people that don't need to sell. They just want to sell. What about new listing count? What's that doing? 52 new listings in November of this year. Last year, you had 56 new listings. So new listings are up, or they're down year over year. But they're kind of floating around the same area they always are. I think. Let's look at this. Listings. Yeah, you're down 7% in new listings, people putting their home on the market. I'm guessing there's not a lot of affordable houses there. Is there a lot of new construction in Pinehurst, North Carolina? I don't know. But it looks like an expensive market that continues to get more expensive. And you can always tell me in here like what you're doing. Like you're like, here's my zip code, housing nerd, Jason. And here's what I'm doing. I'm buying or I'm selling or I want to invest or whatever. Hope that helped. Silver, I don't have that zip code. At $77.24 an ounce. Yeah, silver's off the hook, right? I mean, it's nuts. This is not investment advice, by the way, and I'm not telling you to buy any real estate from any of this analysis or any gold or silver, but man, like it's been crazy. Same with gold, right? They've just been going parabolic. So, question for you, and this is a random question, but is silver in a bubble? You know, is silver in a bubble? A lot of people would say no, but those same people say that AI is in a bubble. And you're like, okay. And a lot of people will give the reason why because the price ran up so much. And you're like, well, silver prices ran up a lot. I'm not saying it's in a bubble, or I'm not saying to invest in silver, but it's been a good asset this year. Oh, 71.66. Okay. Yeah. 77. I was like, wow, it's up a lot today. 300% in 5 years. Yeah, it's up a lot. No doubt. Definitely is. What do we got? You have awesome videos. I live in Clinton Township, Michigan, but thinking of relocating to Kentucky or West Virginia or Arkansas. Okay, cool. Michigan's expensive. And thank you for the compliment, Tasty Tracy. I appreciate your compliment and you watching. Yeah, it's Michigan's just ridiculously expensive. Michigan. I'm going to look at Michigan real quick. Let's see. All right. Let me just go in here. Michigan is expensive. It is, and the prices are incredibly sticky. I mean, if I look at the state overall, it's up 3.3% in home prices. And if I look at a zip code level with prices, Detroit's where all the pain is. I mean, you know, again, I'm a housing nerd. That's why I called my channel Housing Nerd, because I like this kind of data. But just look, I mean, it doesn't take a rocket scientist to look at this and go, where's all the pain in Michigan? Well, it's in Detroit. I mean, look at these prices in these zip codes, down 6.8%. Wait a minute. That's not, is that Detroit? I may be wrong here. It doesn't give me the metros. Yeah. Yeah, that's Detroit. No, this is Detroit. Up there is more like, what is that? That's like the northern, that's like north of Detroit, right? So if I go down to Detroit, it's looks different. Okay. Wow, wherever this is up in Michigan, these prices are down a lot. 9%, 48475, 48468's down 7.5%, 48466 is down 9%. But in Detroit itself, yeah, prices are kind of holding steady. I mean, there's these little pockets down here. What's that? Is that like the Monroe area? Down 11%, 48203 in Michigan. And then Detroit itself, it looks like prices are kind of holding steady. 4% growth in 48079. If I go back to a metro look, yeah, prices are up 3.5% in Detroit year over year. Flint, Michigan, they're up 5.6%. Saginaw, Michigan, they're up 8.5%. What about the northern area of Michigan? Eh, Grand Rapids up 4%. Jackson, Michigan up 4%. So Michigan is still chugging along overall. Let's look at inventory in Michigan. What do we got? Active inventory versus 2019. Michigan or in Detroit down nearly 30%. 30%. Jeez. I mean, there isn't really an area of Michigan. Let me look at a county level look. Let's see. There isn't really an area of Michigan where we're seeing more inventory than 2019. I mean, there isn't one county that has more inventory. They're all down. That's why Michigan's expensive. And then you said Kentucky too, right? Kentucky's down 10% in inventory, and Kentucky is up 3.6% in prices. So I think this exercise is great because it shows us that, hey, not all housing markets are the same. And home prices, despite what a lot of people say, are not falling in every part of the US. And even if the home prices crash, we have like a national home price crash, there'll be areas that don't crash. Even in a whole national price crash, there'll be areas that still stay up. But thanks for joining us. Okay, you want to buy in 26151. 26151. Ah, in Kentucky. Well, I can tell you inventory wise, they're flat basically. Let's look at prices there. Homes are down 4%, single family home price in that zip code. And that's West Virginia, 26151. Is that what you said? 26151. Okay, that's West Virginia. Thought you'd say Kentucky. But yeah, homes prices are down 4% there. Let's look at the typical value. There may not be a lot of homes for sale there. Typical value is $107,000. I mean, this chart is crazy. Look at this. The prices have pretty much stayed the same all through COVID. Like there was not like that rapid increase of home prices and then a decline or, staying the same. I mean, they're $107,000 now. They were $107,000 in 2021. I mean, granted, in 2019, they were 80 grand. So I guess they've gone up $20,000, which is still 20%, but you're not seeing a 50% increase and you're not seeing a big home price decline. I'd say the market there is pretty stable, but I bet there's just nothing for sale. There's probably no inventory. Yeah, only one home on the market. So very hard to analyze. You're going to have to go to a hyper local level by using a realtor, probably, to pull the data for you. But you only have a couple houses on the market. There ain't a lot going on there. So, I mean, with no inventory basically to pick from, whatever's on the market, the seller can pretty much just price it. As long as it's priced, close to market value, they're probably going to get it, I would guess. I can't tell you if it's a good investment or not. I can't tell you that. You need to understand what your goals are as a buyer, how long you want to be in the house, what you're trying to do with the house. Realize that homes, you can see the chart. Well, maybe this would help you understand. You can see the chart. Homes aren't appreciating there like in a rapid rate. They did during COVID, but basically everywhere did. Typical home value. Yeah, look at this. Homes really haven't appreciated much in the last few years. So if you buy, just make sure you want to hang on to it for a while. Because if you buy with 0% down or 3.5% down or even 20% down, make sure you understand how much it's going to take to sell that house. And if you can, even though doesn't look like hardly anything on the market there, buy something under market so that you have some, some equity, right? Especially if you're not putting 20% down. You want to have some cushion there. You want to have some equity when you do buy because prices don't seem like they're moving very much. They could drop, obviously, but if you're counting on appreciation, probably not going to happen. And a lot of markets like West Virginia, rural spots in Ohio, there are a lot of markets out there in middle of nowhere land where prices just don't move that much, right? There isn't a lot going on as far as price changes. It's not like Dallas or something, is my point. So, and if you look around at like prices in that area, they're all down in that area of West Virginia. All these are down surrounding that county or that zip code, sorry. So I would be very cautious and make sure that you are buying underneath of current market values, And how do you do that in a market like this? You got to look for a house that's been on the market a while, got to look at a house that has price cuts, maybe a house that needs work, right? Where you can put in some sweat equity, but don't count on your home value probably going up quickly, right? You have to be there for 10, 15 years before you see any appreciation. And I wouldn't be shocked if prices go down there because they're going down in about every zip code around it. You can see in West Virginia, there's some areas that are really hurting. Like look at some of these zip codes down 23%, 25208. Wow. And I'm a huge West Virginia Mountaineer fan. But man, some of these areas are getting rocked. Yeah, down 23%. Goodness gracious. The zip codes when you look at these zip code levels, it's unbelievable. 25181 in West Virginia, down 23.5%. 24920 down 16%, nearly 17%. Wow. What area of West Virginia is that? 26. I'm just kind of looking up in this market here. 26377 down 12%. It's crazy. Anyway, that's West Virginia. Yeah, I see that. Think about living in West Virginia. Yeah. I don't know if you need to, so you say you need to hold off. Like, it doesn't look like the prices are, like the price trend is just down, right? Or it's flat. It's one of those things where you may just need to hunt for a deal or go in buying with the right expectation. Like, I love this house. I want to be here for 20 years. Make sure you have a slush fund, a backup slush fund, and a backup slush fund, and you can pay your house payment easily, even if you have to work at McDonald's. My guess is, and this is purely a guess, there aren't a lot of jobs around that area. That's purely a guess. But if that's the case, maybe a side hustle, something to make sure that you have some cushion so that if you do lose a job or get into a financial bind, you can easily, make your house payment. Is there a way to tell if a loan on a house is a conventional loan, FHA, VA, DSCR, or HELOC? Is there a database tracking the percentage of loans for a geographic area? There's a guy, there's a guy on Substack, and actually I did an interview with him, John Comiskey. He has a Substack, and he can tell you, his Substack actually goes into FHA loans, and he has very, very detailed information on loans. And if you ask him this, he may give you the information you're looking for. But in a market itself, I don't have a map that does that. So, but I would ask John Comiskey. He could probably help you. What we got here? No PSI, 1313. How's 44107 look? Duplex values seem all over the place. Okay, so 44107. 44107. Northern Ohio, huh? I have an all Ohio channel. Maybe you didn't know that, but I do. Ohio Housing Nerd, because I live in Ohio. So I do a live every week, every 2 weeks or so, and dive into all this data. But I'm happy to look at this Ohio zip code right now. All right. So home prices are up 4% year over year. Let's look at inventory. Well, let's look at the typical value. Wow. $301,000 is your typical home value. $301,000. And that is an all-time high. So you are at an all-time high record price for single-family home values there. Now, inside of single-family home values are going to be like duplexes, triplexes, and quads. That's how they look at that. I'm pretty sure that's how Zillow does it. But this gives you a gauge, right? That, hey, prices look like they're continuing to go up. Let's look at inventory. Inventory's down 1.5% year over year. You don't see that very often. And you're down 52% in inventory versus 2019. How many homes do you have on the market? 67 homes. Last year you had 68 homes. So let me look at this. Let me just make sure I'm looking at the right thing. Active inventory year over year. Yeah, down 1.5%. So at the end of the day, it looks like you just need more inventory. Let me go back to your question. You said you were looking at a duplex. Yeah, so duplexes aren't like single families. Obviously, they're not treated the same. Are you house hacking? Is that what you're trying to do? Just doesn't look like you have a ton of inventory. Looks like there's a very, it's just not impressive. Right? If I look at active inventory count again, I got 67. Last year you had 68, so you're down one house or one property. Year before that, you had 68, 64. Look, go all the way back to 2019. Look at this, 142. 142. That would make a big difference, right? But right now, you're just not seeing the inventory that you probably need to cause any type of big price change. What about new listings? Let's look at those. I mean, you're down 25% in new listings. So people aren't listing their homes there. You're down 25% year over year in new listings. And you've got 36 new listings in November. The year before that, in 2024, you had 48 new listings. Just people aren't listing their homes, man. That's what's going on. And by the way, I call everybody man like on here. I don't they I'm not trying to be specific, but yeah, you just don't have any homes being listed. At least that's what I'm seeing. And you tell me otherwise. I'm asking because of you have the question about the DSCR, FHA, and conventional loans. I'm asking because the DSCR loan appraisal fraud in Baltimore and other places. Hmm. Yeah. And then you're going to hunt for a deal that way. Not a bad idea. So if you can, so let me ask. This is what you could do. Let's see how I would do this if I wanted to know DSCR. You could use a program like this. Uh, You could use a program like PropStream. Another program like it is Property Radar. Same type of deal. This is I use this. I have a subscription. It's uh it costs money. It's like $110 a month. But my point is you could probably get it for like a month or a couple months, right? If you wanted to invest some money into it and do their trial first to see if it makes any sense for you to subscribe. But inside of this, I can filter for like I don't know if I can look at DSCR or not, but I can look at there's a way to look at here we go. So okay. So here's the loan types. If you can see this on my screen. And I can look for conventional, FHA, VA, credit line, reverse mortgage. I can't look at DSCR necessarily, but I can look at conventional FHA and VA and maybe like a commercial loan that may fall underneath DSCR or other or unknown. That could be a way to look for them. I'm not sure that helps a lot. Look at this. Here you can look for adjustable properties with adjustable interest rates. You could do that. Sometimes that helps because if it's an adjustable interest rate, they may be having some serious problems right now. You can look at how many mortgages they have, right? You can filter it by one mortgage, two mortgages, three mortgages, whatever. But I'm just trying to think because this is a great question about DSCR, like how I would find them. I mean, they're they're not private. Well, I guess they are. They're loans that aren't usually backed by Fannie and Freddie, right? So I guess if you looked at these loans or looked at these properties and look for other, that would tell you, right? Other loans or unknown, right? Like, let me look here. Look at Baltimore, Maryland, and see what this looks like. So if I look at other loans in Baltimore, Maryland, this tells me there's 10,841 loans or properties with other loans. What does that mean? I don't know. I don't know if it means FHA or VA, but it could be a chance. Like this one right here. Well, this one actually is saying new conventional, so maybe it won't work. Maybe it won't work. I don't know. You're gonna have to get crafty. If you made friends with a title company, maybe they would tell you. But just looking for DSCR, maybe a challenge. Let me look at filters again here. Well, one thing you can do, I know, is you can search for LLCs. So I could come in here and look for only LLCs. Like, where was it? They just changed this. Here, owner information. So I can say, all right, corporate, right? I want to know all the corporate properties. So let's do this and what's this? It's probably more than you needed to know, but so in just LLCs or corporate owned properties, there's 76,000. So this could be a way to do it, because if you looked at all the loan or all the properties that are corporate owned, that kind of narrows them down a little bit to 76,000. But if you looked at your specific area, obviously in Baltimore, you would know if it is Baltimore where you want to buy. So PropStream could help you. Property Radar may be able to help you. Beyond that, though, you literally have to go property by property, I would think. All right. I got a couple more and then I'm going to wrap up. Oh, nice. Is there any rent info? Oh, okay. Sorry. I went off on that tangent with property with PropStream. Yeah. So you want to look at rent. Let's see. Typical rent. Another area I use rent for rent analysis is Rentometer. They do pretty well. So this is for just typical rent, right? How much you're going to typically see in rent. It's $1,300 a month. Doesn't look like it's crashing. It's not an all-time high, but it's definitely gone up steadily in the last several years. By the way, great job buying a duplex. That's what I love. I love duplexes, triplexes, and quads. That's usually only thing I'll really look at. And that's the bulk of my portfolio in Ohio are duplex, triplex, and quad. They're all old, obviously, require a ton of upkeep, but that's what I like. All right. So thanks for suggesting that. All right. Let's look at Denver. And then I'm going to look at Naples. And then we'll end it. So let's see. Denver, Colorado. What do we got? So if I just look at Denver Metro, down 3% year over year in prices. Let's look at the typical home value. What do we got? Typical home value is $584,000. Not an all-time high, obviously. You peaked at like 627 back in 2022. Now you're all the way down to 584. Let's look at active inventory versus 2019. You're up 50% since 2019. Completely different than where we were looking earlier today or tonight. That's pretty extraordinary. Active inventory count, look at this, 10,000 homes for sale. It's a 10-year high. Like, well, for this time of year. You had more earlier this year, a lot more homes. I mean, you've lost 3,000 listings in the last few months. So inventory is going down. And new listings, 2,900 last month. Last year you had 2,600, so you're adding more new listings. But you may just have a lot of people taking their homes off the market. So that's Denver, if that helps. Let's do Naples. Naples, Florida. Single family home prices down 8% year over year, down 8%. Yikes. So definitely taking a hit there in Naples, Florida. Typical home value, this has dropped a lot. 665,000. In March of 2024 is when you peaked, it looks like, at 747, 748. So you've dropped a lot, nearly 100 grand, not quite 100 grand, but getting there. Wow, wow, wow. Let's look at inventory, active inventory. Up 8% year over year. So you continue to add listings. You're up 2.6% versus 2019. No surprise. You've got 6,000. Now, this covers Marco Island as well, but 6,000 listings right now. Last year, you had 5,600. So you've got more homes, to choose from, which is good. Earlier this year, you spiked all the way up to 8,300 homes. Now you're down to 6,100. So either a lot of delisted properties or it's a lot of, or people are actually buying them. Price reductions are only 14% of the market. So not a lot of price cuts, although prices are down there. So sold prices are down. That was single family prices. Let's do condo prices. Condo prices are down 9%, 9.4%. Goodness. Wow. And this will be interesting. What happened since 2019 or 2022? So since 2022, home prices are down 10% in Naples. In other words, if you bought, 2022, 2023, 2024, home prices have been declining, down 10%. What about since COVID started? How are you doing on prices? You're still at 53% though, versus pre-COVID. That would tell me that there is a massive, massive growth that you saw during COVID. Yeah, you did. Look at this. In November of 2020, the typical value was $430,000 in Naples. In November of 2022, it was $714,000. That's nearly an increase of 300 grand on a $700,000 home or a $400,000 home, however you want to look at it. In just 2 years, homes went up nearly $300,000 in Naples. So, do you think you'd see a price decline? Probably, right? Probably. Wow. And now they're still not even close to that level. So, like an area like this, home prices would have to completely cave and collapse, completely collapse. And it just doesn't look like you have the inventory to collapse, right? 6,000 units right now. You are building inventory, though. I mean, back in 2018, you had 6,500. So you do have a good amount of homes on the market. But to get prices back to 2019 levels or 2020 levels, I mean, you got to fall a lot. Yeah, you're up 53% since 2020 in home prices, and you've fallen nearly 100 grand in prices since 2022. So that tells you how far they ran up. That's unbelievable when you look at it. I still get mesmerized. I'm like, wow. People just went insane when free money came into the system. So that was Denver. I did Naples. Hey, you too. Have a great holiday. Have a great holiday. Good luck with that duplex. I'm guessing it's an old duplex, but that's how they are in Ohio. All right, y'all. Listen, I hope you have a great holiday. I appreciate your interaction. I really appreciate you supporting the channel. It's been a great year for the housing nerd. It has been. And I'll keep at it. We'll look through next year, see if, we're going to find home price decline nationwide. And I'm going to do my forecast next week. So until then, I'm the housing nerd. Have a great night. Have a great Christmas or whatever holiday you celebrate. And we'll see you on the flip side. I'm out.